Good afternoon. My name is Aaron Jacobson Swanson. I'm the president of CFA Society Atlanta. I'd like to welcome you all to our online series, The Future of Sustainability and Investment Management Research Tools. We shared this webinar across the Southeast region and have attendees representing several local societies. I also encourage you to join us and register for 3 upcoming online series. On April 28th, we have the online soft skills series, Hack Your Brain, Unlocking Your Potential in the Digital Age. On May 4th, we have the Mentorship Journey, a conversation with Jim Krupe. Now on May 6th, we have the Future of Emerging Markets and the Coming Digital Generation. We are joined today by Rebecca Fender, CFA, Senior Director of the Future of Finance at the CFA Institute, and Dan O'Connor, CAIA, Director of Institutional Relations at CFA Institute. Please submit your questions via the Q&A feature within the Zoom controls at the bottom of your screen. Without further delay, I give you Rebecca and Dan.
Thanks very much, Aaron. We're really pleased to be here with you today and to talk about this topic, which tends to be one of the ones that is of most interest to our members. So we have been working on this subject for a while, and Dan and I will share with you some of the highlights of what's going on at CFA Institute in this area and what we're learning from our broader network. I should note that this is from a paper that was released just at the beginning of December, and one of the authors is one of our own from CFA Society Atlanta, Bob Stammers, who I think might have joined us as well. So again, thanks to him for his contributions along the way to this. I will try to do it justice. So as we think about sustainable investing, our proposition is really that sustainable investing is critical to the sustainability of investing. So the incorporation of sustainability into investment management, we think, is an important element for the industry's mission to serve society by improving long-term outcomes. So there are many aspects of sustainability that are still unknown. We don't have all the answers yet, but we would suggest that there are 3 important ways that this topic of sustainability extends the concepts we have from traditional investment management. So first, it is additive to investment theory, and it does not mean a rejection of foundational concepts. Second, it develops deeper insights about how value will be created going forward in terms of using ESG, or environmental, social, and governance tools. So as we talk about sustainability overall, we think of the concept and ESG as the tools. And thirdly, it considers many stakeholders. So as our title suggests, we think we're moving from sustainable investing as a good idea to the factors now coming into place to make this more of a reality and impact portfolios. So just a quick overview of how this fits into work we've been doing and sort of the conceptual framework. So way back in 2017 now, we talked about 4 different scenarios that we thought are important for the future of the industry. And we think those still hold true. But these I want to mention because they are strategic lenses for which to analyze the future as you think about leading an investment firm. So, of course, fintech disruption, we know that that means not only near-term efficiencies, but longer-term tech implications for analysis. And definitely a crossover into new types of data we look at in terms of ESG. Parallel worlds is the concept we've talked about where different segments of the population interact with the industry, the investment industry, in different ways. And that leads us to the opportunity for the industry to do much more in terms of customization and personalization. So we think that that overall trend comes together nicely with ESG as we think about outcome-oriented portfolios and being able to align more with your values. Lower for longer, of course, we can think about historically low interest rates we've had for a while. But really this asks, if we have a period of 5 to 10 years of very low returns in the industry, what does that do for the business model? And we've certainly seen pressure on fees as well. And I think that makes it all the more important that we make sure we aren't limiting our toolbox in terms of how we analyze potential investments. And lastly, purposeful capitalism is a scenario that envisions an industry with more alignment to ethics and client needs. And so this is also where we talk a lot about sustainability and diversity and a lot of the areas that, again, we'll go into in more detail. So just to note that if you're interested in looking back on any of this, we then follow that up with what are the implications for the investment firm. So you can look at how these relate to the business model, operating model, people model, investment model, and distribution model of investment organizations. And then we looked at the investment professional of the future. How will careers be adapting and so forth? And we have some new work coming out in about a month around the future of work in investment management, as we've seen lots of disruptions there and potential interesting paths forward there. So again, there are connections then to these broad trends as we think about sustainability. We're also going to look at how firms will need to adapt the ways they build teams, and then also the skills that investment professionals should really think about in order to be competitive in this space. So we didn't create a new scenario per se in this paper, but what we did was think about some applications, particularly of the purposeful capitalism scenario. So we see, of course, climate as one of those areas that is very much in focus as not only regulators, but also investment organizations are thinking about how do you look at climate risk management? How do you consider the physical risks, transition risks, and so forth? And we have another paper actually on this related to innovators in this space. And so if you're interested there, Matt Warsaw, my colleague, has written a paper with some different case studies on this. But and he puts forward some proposals, including the need for carbon pricing and carbon tax. So social status is the other application we talk about, and that really just talks about the S of ESG becoming more and more important, especially I think given events of 2020 and ways that we've really seen how connected we are as a world. This puts the focus on what does that social aspect mean? How do we measure it, and what will organizations do as they think about different stakeholders more in depth? So now just a brief word about methodology, and we will jump into it. So we're very pleased about the fact that we had more than 7,000 people contribute to this paper in some way. So again, just as we've talked about the different perspectives that are important here, we had views from the investor survey. We talk about the end client, whether it's a retail investor of varying asset levels or institutional investors. So we surveyed those from 15 different markets. And then our practitioner survey, that's of the CFA Institute members. So we had 2,800 of those. And on the qualitative side, we did more than about 24 roundtables virtually with close to 250 participants. So that was really helpful to get more depth and perspective from around the world about what people are seeing in practice and what their questions are. It's certainly much more than we would have done in a few years ago, where we might have just done a couple things in person. So we're really pleased with the methodology here and just the reach we've had to get input. So with that, the structure of the paper. First, I'll note that we are considering a 5 to 10 year time horizon in all of these papers. So as we look out to the future, we think it's helpful to look at it in this way. So we use this acronym of IDEA as a way to structure things. First, looking at the influences. Basically, this is about the journey of sustainable investing thus far, how we got here, and those potential scenarios for the future. Then D is for drivers, which relates to the changes that firms are making to their business models and their investment models. E is for enablers, and that really examines the importance of data quality and human talent. And lastly, the actions are summarized in what we call a rubric, or kind of a self-assessment that can help to guide individual investment professionals as well as investment organizations. So let's jump into it. I'll give you just a few highlights from each of those sections. And again, we will be taking questions at the end, so I would encourage you to go ahead and send those in as you have them. So again, influences is really about the journey of how we got to where we are and where we're headed. And so I would especially note that this is a relatively long paper, but this section in particular can be considered a pretty good primer for anyone really just wanting to get up to speed with sustainability. If you're just thinking about it or you've got colleagues that might find that helpful, I would point you to this in particular. So one of the things it includes is a pretty extensive timeline on sustainability. But here's an excerpt where we really are pointing out the idea that there are 3 phases as we see it. You can see the acceleration of this topic through this. So the first phase is about 35 years long. It starts with the first sustainable mutual fund and really continues until 2006 when you have the UN PRI launched. So the first phase is much more about exclusionary screening, different things that you might not want to have in your portfolio for various reasons, often values-based. Then that shifts to ESG integration as the focus in phase 2. And a lot of other risk tools developed during that time. Also notable that the Paris Agreement in 2015 put climate into focus. Now we would suggest that phase 3 is really marked by the huge increase in interest we've seen in the year 2020. And so, you know, with the context of pandemic and racial unrest and so forth, there was so much going on that got us thinking more deeply, I think, about systemic, the ways there are risks, the ways that we are connected globally. So with that, let's move into some of the data that we gathered to support these points that there is an acceleration. The first comes from CFA Institute members, and that is the high level finding is 85% of our members surveyed now say they take E, S, and or G factors into consideration in their investing. We've done this for several years, and that was a pretty big jump from the last result in 2017, where just 73% said that. You can see that across the board, all of those different elements have increased, with environmental the biggest jump. Now, when we consider what's motivated this interest amongst investment professionals, the top 2 reasons are to manage investment risks and respond to client demand. So in fact, client demand was most often cited by investment professionals in the Americas region. About 65% of them said client demand is a key motivator for why they're considering ESG factors. So if you think of this as about 2/3 versus just 45% or less than half of those same respondents in 2017 from the Americas. You can note that, of course, there are regional differences. Those in Europe are much more likely to say they have a fiduciary duty to consider ESG issues, that their firm can get positive reputational benefits, and also regulatory requirements, which we see speeding up a lot across the EU. Now, next we move on to drivers. And as I mentioned, this section covers how investment organizations are adapting and expanding their business models and their investment models to meet investor expectations. So diving more deeply into the client demand, our investor survey found that about 70% of retail investors have interest in ESG, but only about 10% are currently investing in products that incorporate ESG factors. On the institutional side, about 19% said they are currently investing in ESG integrated or ESG products. Now, we could argue that there may be more happening on a process side than some clients are recognizing, and some, you know, there's a little bit of a debate whether you should have an ESG product or really focus more on the process. Anyway, we cover all of that as we think about what we'll cover next. So first of all, I think it's worth noting that in every market globally around the world that we surveyed, a majority of investors have interest in ESG investing, and it's growing. So here on the slide, you can see we have interest levels by age. So many people will often talk about how it's really young investors that care about this. But you'll note that on the right-hand side of the chart, we see that a majority of investors at every age now have interest in ESG strategies. So we see not as many in the sort of the older ranges are necessarily employing those strategies right now, but interest is very high. And so this is definitely a big opportunity for the industry overall. So given that gap, though, between interest and actual use of such strategies, we wanted to dig a little deeper into what the client motivations are for ESG interest. So we asked, so what's your interest based on? And here you can see that the options were in green. I expect ESG investing to result in higher risk-adjusted returns. In blue, you can see I want to express my personal values or invest in companies that have a positive impact on society or the environment. And then the last bar is for I expect both. So what you can see is that institutional investors, the plurality would say they are looking for higher risk-adjusted returns. So they see that benefit, particularly again, as you think about ESG integration. On the retail investor side, it is much more about alignment with values and how people would like to have their money work for them. I think it's also interesting to see that by age, as you have here, the younger the investor, the more likely they are to see ESG as a win-win from a performance standpoint. So, of course, that brings us to how are organizations actually implementing ESG investing. And I've mentioned a bit about this already, but here are 5 different approaches that we've been surveying on for a number of years. ESG integration has really remained a leader, but it's notable that all of the other categories have grown significantly. These represent also 5 of the 6 types of product features that are in the consultation for the CFA Institute ESG disclosure standards for investment products. The one that's missing from this slide is about impact objectives. So again, I mentioned that you can have a product that's labeled as an ESG product, but there are many other types of portfolios, even if they don't have that label, that may use some of these techniques. And so that's some of the clarification that we're hoping to help with in the marketplace. And it's that same group, the GIP standards group, who have been working on this. And I'll just note that that is in progress now. There's going to be another consultation in May, and the final standard should be available in November. So let's move to the next group, next area, which is the enablers. So again, here we're examining how the operating model and the people model of investment organizations are changing. So these are the key inputs you need to do sustainability effectively. So first you wonder, okay, how much of a commitment is there really by investment firms to this space? And I think the chart shows pretty clearly there's been a huge increase in expected commitment to research and of ESG and sustainability issues. So this is just from a couple of years ago that we're comparing. And so you can see that now about 90% of investment professionals expect their firm's commitment to ESG research to increase. We also looked at this just as it related to the C-suite, those senior executives who probably would be setting the budget and deciding if there's more staffing and so forth. And it was very similar. 88% of those said we will be committing more to this area. So, this is, I think, something that will also come with some culture changes as organizations think about how they do this effectively. So let's think more about then data. So data challenges are often the first thing that our members come to us with on ESG, and they're typically somewhat frustrated that there seems to be a lot of data, but it's not really clear what the best inputs are to use. It can be a little bit messy. But overall, we know that without good data, we face the risk of greenwashing. And so again, from a transparency and ethics perspective, this is troubling to CFA Institute, and it was, part of the motivation for working on a standard. So we find that nearly 80% of CFA members that we surveyed said there is a need for standards to communicate clearly to clients. The other chart here on the right notes that ESG ratings have been an important data source. They are used widely by about 2/3 of analysts and portfolio managers. In addition, at the bottom of the page, you can see that more than 70% of those we surveyed expect that ESG ratings will have a greater influence on a firm's cost of capital in the next 5 years. So again, these things matter for how companies will be working, and there are these different factors going into analysis now. Now, the world of data is changing rapidly, and so we also thought it was important to talk about alternative data. And we think that ESG success will hinge heavily on how well an organization's technology adapts to new types of data. So I mentioned we did many roundtables. Among those participants, more than 70% see the promise of alternative data to improve the robustness of sustainability analysis. And you can see 43% expect sustainability to benefit from the application of artificial intelligence. So again, we have this confluence of fast-growing topics of artificial intelligence and sustainability, and some interesting ways that they're coming together. I also think it's interesting to note, as we talk about data, there are many different types. And one thing we discuss a little bit more in the paper is this idea of soft data as well as hard data. So soft data are the data that are really difficult to measure and express, which you can contrast with the hard data, which are the much more traditional types of data we would typically use. So soft data can come from things like assessments, opinions. These surveys are soft data, right? It can come from experience or interpretation through modeling. So therefore, there's a bit of subjectivity in these data points, but the reason it's important is that there is materiality. And so some validity challenges potentially, but materiality importance. So the example I like to use for this is if you have, say, a watch that can monitor, a smartwatch that can monitor your sleep. It can tell you lots of very specific hard data about how well you slept, and heart rate and breathing and things like that. But then they often, when you wake up, ask you on a scale of 1 to 10, how well did you sleep? And that's the soft data part, which we know is material. So again, seeing how these come together is an opportunity for us to start to incorporate data we may have disregarded before because there wasn't a nice, neat way to fit it in. So moving on, a growing area for data, of course, is climate. And for those, again, interested in a deeper dive in this, I point you to my colleague's paper about this. But when we surveyed our members, only 40% say they currently incorporate climate risk into their analysis. Again, the primary reason is materiality. We also see that client demand is a motivating factor, and I think that will continue. So now let's shift to the people side of the enablers. And of course, we know that data has to be converted to information and understanding. And if you don't have people with sustainability expertise, that can be a challenge. So we used LinkedIn Talent Insights as sort of another alternative data source, and found that the supply of expertise among core investment roles is limited, but growing quickly. So you can see here that of the 1 million or so profiles examined, less than 1% list ESG as an area of expertise. This is equivalent to about 8,000 people, but it's increased 26% in the last year. So again, this is consistent with the strong interest we've seen in a certificate program out of the UK Society around ESG, and we'll just mention that at the end for those who have interest. So we've got relatively low supply, but on the demand side, that last column of the chart, you can see there's high demand. So 18% of portfolio manager job postings were seeking expertise in sustainability. And again, that last column represents about 10,000 job postings just over a 1-month period. So as we think about that, the structure of teams then becomes important. How do you get sustainability expertise and how do you use it across the organization? So we found that about 1/3 of those we surveyed said their organization has dedicated ESG specialists. About 1/3 have portfolio managers who do the ESG analysis, and about 1/3 do not have specialists. So in our roundtables, we discussed a bit about why might some not have any ESG expertise. And of course, some would say that they've got particular strategies where it's not as relevant. It may be because of the size of the organization and not able to justify the cost of a full-time person, or it may be that they outsource some of that work. I would note that for those who do have ESG specialists, about half are in a separate function and about half are embedded in the investment teams. We would argue that there's not necessarily a one-size-fits-all approach, but there was some pretty good consensus that, we think most organizations are going to need to increase knowledge about this topic overall. So most portfolio managers will need to know more about this, but it's also helpful to have a specialized resource who can go into really the deep details in this space. Just to put a few more numbers around training in ESG, we found that only 11% of our respondents consider themselves proficient in this area, but an equal number are currently being trained. Furthermore, about 70% have interest in training, and half were saying they're going to look into that in the coming year. So, of course, we know that this training will be kind of a mix of formal courses, learning on the job from others, and learning by doing. So, with that, let's move to our last area, which is about actions. So here, as I mentioned, we are introducing what we call a rubric for investment organizations and investment professionals. And that is a term that we take from education. So here, I'll pull up the rubric areas. And just note that in education terminology, rubric means a scoring guide or a grade for to assess students' knowledge and provide feedback for improvement. So the purpose, again, is to offer organizations and individuals a way to have a candid self-assessment of where you are. And as we're looking out 5 to 10 years, these are kind of high bars for organizations and individuals to aspire to. I will give you the link to this on the next page in case you want to do it yourself. But I would note it's strictly confidential, and it's really just to help people identify where there are gaps and what they might like to do. So let me give you a high level of what the areas of the rubric are. From a logistical standpoint, the self-assessment just has 3 questions in each of these, so it's pretty quick to get through. So you can kind of think about this in 3 main areas. The first 2 points are really around investment thinking. The middle is around technologies and ways of working, and the third is around teamwork. So first, on ESG education, we find that ESG knowledge and practical know-how is relatively uneven across the industry, right? It's an area that has grown a lot in importance in a relatively short time period here, and so that's just to be expected, and it matches the numbers we saw on the prior slide about those who would call themselves proficient. It's hard to stay proficient in an area that's moving so fast. The second point on system level thinking, this is what we think needs to be combined with traditional investment thinking in a sort of complementary way. So again, this means thinking about investment decisions and not just the immediate impact, but then the ripple effects of these investment decisions and how investment decisions impact the system and are impacted by it. Then as we look at number 3, collaboration synergy, we know that at an industry level, there's a lot of good work being done on sustainability, but it hasn't been very joined up across organizations or even within organizations. Across organizations, we're starting to see more collaboration again with some of the key organizations, particularly I think on the corporate issuer side. But in organizations, we also see challenges with silos where information that's needed isn't getting out across organizations. And then as we look to ESG data, we've talked about that a lot. We think we're kind of at a point where ESG data goes from being sort of the source of the problem around ESG to the source of the solution. So, so again, a lot more will be coming there. And I think it will make the jobs of analysts easier in this area, but also there's going to be a lot of exciting opportunity to find new ways to use data and create some alpha. As we look to sustainability innovation, number 5 there, we would argue that innovation in this space, it's still pretty early days, that there are a lot more types of products that can be developed, a lot of ways that ESG can be integrated across different asset classes. So we expect to see this speeding up. And lastly, I mentioned culture earlier. And so we think that organizations who recognize the sort of enlightened self-interest or the win-win proposition of sustainability for their organization and their clients and portfolio outcomes are going to be best positioned for the future. So as I mentioned, we kind of like to give readers of these papers and our members overall some resources. So here is the link to that rubric. And I'll note that if you go through the short list of questions, you'll also at the end get a list of resources. So these are both from within CFA Institute and outside CFA Institute. And we've organized them by things that you could either do really quickly, here's a quick blog to read, or something that might take a couple hours, or something really more in depth if you want to get into it deeply. So I'm going to do one last slide before I hand it over to Dan for a couple minutes, but I just thought for this group in particular, it'd be helpful to think about, to tell you more about how CFA Institute is thinking about this topic of ESG and how we can be useful to the industry. So as we think about data, I like to think of it in sort of 3 areas to maybe simplify a bit. So the first area is the data needed from the company or the issuer to the analyst. And so there's lots of good work being done by SASB and TCFD and others there. And again, we're starting to see some good cooperation so that this can be standardized. We think this is helpful for the industry. And we think our role is to be an advisor to these groups and bring the investor point of view so that investors have the information they need to do good analysis. Then the next phase is from the analyst to the portfolio. And here we think there's lots of room for interesting techniques, different ratings, indices, and so forth. And here we think that our best role is to educate our community more about how you can expand your analytical framework to think about these different factors and so forth. So you may be interested to know that the CFA program has increased ESG coverage by 130% just in this latest version of the curriculum. About 16% of readings overall include something around ESG. And so it's really only a couple readings that are fully dedicated to ESG, but then many more have examples that relate to how ESG works in, right? So whether it's across lots of the different areas of the curriculum. And then of course we've got research and stuff like that. So again, we're educating in that space. And the last phase is from the portfolio to the client. Sorry if I feedback there. And so there we're creating investor standards, as I mentioned. So with that, I'm going to pass over to Dan.
Great. Thanks, Rebecca. And thanks to everyone at CFA Society Atlanta for having us today. Just want to spend a few minutes talking about the certificate in ESG investing, which is new to CFA Institute. It was developed for the industry by leading practitioners, and CFA Society UK actually launched the certificate back in 2019 to meet the significant demand for financial professionals to gain valuable skills and insights to integrate environmental, social, and governance factors into the investment process to meet clients' changing needs. So CFA Institute has been an early advocate of ESG education and has significantly increased the presence of ESG within our CFA program because, as we know, ESG investing is globally important and here to stay. Thus, it only seemed natural to join forces with CFA UK to bring the certificate to our global community. To date, we've seen over 6,000 registrations from early interest in just the first 16 months of the certificate being offered. And given the rapid growth and interest in ESG investing, professionals we feel will need to be well equipped with the knowledge and competence to build trust and confidence with their clients. We feel that the certificate's focus on portfolio construction, integration, and reporting within a convenient self-study program makes this a true core competency qualification with global relevance for investment professionals. In fact, PRI has even endorsed the certificate in ESG investing and offers exemptions to certificate holders from its own online academy courses. And here you can see, 76% of institutional investors and 69% of retail investors have shown interest in ESG. Next slide, please, Rebecca. So how to earn the certificate? Just wanted to give you an overview of what the certificate is and how you go about getting it. So it is a self-paced study program, and the recommended study time that we've heard from our colleagues at CFA Society UK is about 130 hours on average. It may take some less time to prepare for the exam, but that's what we're hearing on average. There are no formal entry requirements, so it is eligible for anybody to consider. And again, it is endorsed by the PRI. The exam itself is a 2-hour and 20-minute exam comprised of 100 questions that are multiple choice and item sets. The pricing is about $660 US. You'll see it's represented here in British pounds as well, because it is a UK product today. It will be migrating to CFA Institute later this year. And that includes the study materials and the exam registration itself. So during the pandemic, of course, testing has been challenging, but we've been very fortunate to be partnered with the OnView online proctoring system, which allows candidates to sit in the privacy of their own home or company to sit for the exam. We will be opening up the exam to Pearson VUE testing centers later this year as well, if that's your preference. We've actually now exceeded over 6,000 registrations since its launch. And many employers are already adding it to their learning programs and certainly within their ESG teams as a tool for their educational progression. Next slide, please. So the certificate has been designed for practitioners working in investment roles who want to learn how to analyze and integrate material ESG factors into their day-to-day roles. It will also be suitable for anyone looking to improve their understanding of ESG issues working in sales and distribution, wealth management, product development, consulting and risk. And we've seen about 60% of the registrations come from either investment or client-facing professionals, with the split being about 50-50. So as you can see, it is very diverse in terms of its who it's intended for and who may benefit from going through the program. Next slide, please. So the syllabus, as you can see here, it's comprised of 9 chapters, and it's very comprehensive, thus has wide appeal from both those that are new to ESG investing, as well as those who are seasoned practitioners who may have some knowledge gaps and are looking for more objective understanding of ESG investing. Case studies are used from around the world throughout the program, and the certificate is developed by an ESG panel with a wide range of both academic and practitioner input. It's refreshed and revised annually to reflect both market and regulatory developments. And here you can see kind of the weightings by each chapter. So you can see the emphasis, obviously, on analysis, valuation, and integration in Chapter 7. CFA Institute product review of the syllabus and learning outcomes found the syllabus to be relevant and robust. And as we progress through new versions of the certificate, we will draw on CFA Institute's practice analysis resources to ensure that the certificate remains to meet the growing demand for global skills and knowledge. Next slide, please. So I just wanted to share my information if anybody had any questions after this presentation. Happy to answer them. There's a link there as well to the certificate. At this time, I think we'll open it up to some questions. I see a couple that have come in already that I will send to Rebecca right now. So Rebecca, we did get a question. You talked about the surveys and the roundtables that we've conducted over the last year and a half or so. How do people get involved in those future surveys? You had a question about, wanting to contribute to that.
Yeah, great question. And we're glad to have more people involved. Are you able to hear me okay?
Yes.
Okay. So we are always looking to get more input on these things. And so I would encourage you to follow what we're doing, and we'll be working through societies a lot to develop this further. So I would say, you can always reach out to us if you've got some specific ideas on how to get to be involved. I think we've already got questions about what's next then on ESG. What will we do to build out our portfolio of research? And those ideas, they come from you, right? So we really do encourage you to reach out, and we would love to explore some options further. We will have other opportunities in the future. I don't have other topical examples right at the moment.
Okay, great. And we had another question come in asking if we could clarify ESG investing within an ERISA framework.
It's a great question. So we are following the discussions on this quite actively in our advocacy area. And I would point you to Market Integrity Insights. If you just Google that, you can find a blog that my colleagues write on regularly. And so I would say that that's probably the most current in terms of how to manage that. The other thing that I would note is that there was a question, I think, on the data around LinkedIn. And so I wanted to just pull that up again, because I think it's a good question. So somebody had said, where does this information come from exactly? Dan, would you mind trying to mute?
Yeah.
I think that might help a little on feedback. So as we looked at it here, we have to look at a number of different categories in terms of what people put in their profile to understand who has expertise in sustainability. So I think somebody had said, so if I just click that I have expertise in sustainability, am I in these numbers? The answer would be yes, as long as you're in the right types of job roles and organizations, right? A lot of the sustainability expertise is actually outside of our industry. You've got it in the oil and gas industry, you've got it in lots of different places. And so while there is, with this sort of alternative data, there can be validity questions. People can lie. The question is it material? And if we compare that then to what we see in our own membership, and we ask, do you have expertise in this area? We see it's pretty low, right? We would expect that our members probably are on the high side of learning new things based on how much they've done already in their careers to learn. So we think that this seems reasonable. I will note that there is a much deeper analysis of how we did this work on the website. So if you are curious, you can dig into it there. I think there's another question around, have we done work related to scores that investors are currently using? We haven't wanted to endorse particular vendors. So I would say we probably haven't done I don't have a factor figure to quote that would give you the direct answer there. We hear, anecdotally about things and kind of track the sort of market penetration. But I would note, maybe going again back to this question about data types, there are clearly people that get, quite concerned about the challenges of, different types of ratings not matching, right? And why isn't there a higher correlation between these things? There's been academic studies on this and so forth. But what you'll note here is that, slight majority say, this is a data point I use among others in the analysis, right? And so I think to be really good analysts, as we assume all of our members are, you're going to look one level deeper, right? And so how are those constructed and so forth? I think it makes sense that you're going to kind of have your own proprietary mix of how you weight that and what's most relevant for you. I do think maybe there's a risk then, if you look at that compared to the figure at the bottom of the page, that if the market isn't looking as critically as well, but just looking at a couple different ratings as a proxy for effectiveness, there could be a mismatch. But on the other hand, it could be an opportunity for you. So that's how I'll answer that one. And let's see. I guess also just a note, thank you. Thank you to our listener who notes that there are some free tools available. So Robeco and Sustainalytics have free tools on Bloomberg at the moment. So you can check those out now. And I think that's great as advice on how to start getting into this too, right? And you'll have to play around a little bit with the data and with the different data sources. And I would say also, if you want to learn more about specific types of products or approaches, that's another way that hopefully CFA Institute can be helpful. And again, Dan has relationships with a lot of these organizations, so he may even be able to say more on that point.
Rebecca, we had a question about what we're doing to develop an ESG standards.
Yeah.
Do you want to touch on that?
Yeah. Let's see. So appreciate the question. And I see that in the details too, it's talking about the importance of maintaining investors' trust. And so again, I would say there are some people in the in ESG space that say, let's not even use the term greenwashing because it just creates a lack of trust. And while I can understand that, I think that, and sometimes maybe it's overplayed. I also think that we as an organization need to be the one that's out there saying it's not perfect yet. It may never be perfect, but we think we can do a lot to improve the quality of the information out there. So sorry, just again, to maybe give the timeline, we do have a work in progress for this standard. Again, important to note that it's not the company issuer side, it is from the investment manager to their clients, that sort of reporting side, and pretty much on the institutional side for the most part, probably applications to the individual investor as it goes on. But there's been a technical specification group that's been working on that for a while. We've had tons of interest and volunteers raising their hands to be part of these groups, which is great. We've had good groups. And so again, look for something in about a month, I'd say, from that group where we want industry input to see, is this going to work, right? I think there's a lot of enthusiasm around this space, and there are some things in the marketplace right now and that are people that are a little challenging on how to implement, right? So we want something that is going to work for the industry, and that's why we've been getting so much industry input. So again, look for that. Please do give your thoughts. We like to hear from lots of different firms and different industry organizations and so forth. And then we are hoping to have that available for the marketplace in November. You know, we can also maybe send along a link to, as we send the presentation materials, we can send a link to the work that's being done there. We did just get another question in about, do I know if ESG investing rating firms are taking into account corporations' political donations as a factor? And I'm sorry to say, I do not know the answer to that. So it is good to hear, though, that we've got people asking, asking questions about, what is really incorporated, what is material, and, what should we be using in analysis? So I think that maybe clears out the list of questions here. Kathy, do you want to close it out just a couple minutes early?
Absolutely. Thanks again, Rebecca and Dan. We appreciate you for joining us today. It was very insightful. and obviously engaged our audience. And thanks to everyone who connected with us today. I wanted to note that we shared this webinar across the Southeast region and had several attendees from several local societies with us today. We appreciate your support and participation, and look for an event survey to follow, including the replay and meeting presentation. And we'll also get that link that Rebecca just mentioned. Thanks, everyone. Have a great day.
Thanks.